G'day guys, welcome to the Australian Crypto Convention. Pav and I are down here in Sydney. We're recording interviews with exciting guests all weekend, so we're really keen to jump in and ask questions like, are we in a bull or bear market? Does Bitcoin go to 0 or $1 million from here? What else are we asking, Pav?
We're asking what's the bigger picture. I think a lot of people right now may be missing the forest for the trees, so we wanted to get some of the experts out there, their take on the market, what they're seeing behind the scenes, that really you have to come to these conventions to really talk to the kind of people that are, building the next generation of crypto products, right? So we're really excited to share some insights out of that.
Yeah, we're super buzzing. So, mate, let's get into it.
Let's crack in. All right, guys, we're back with the next talk here at ACC. We have the Richard Galvin, CIO and Executive Chairman of DACM. Mate, very huge background just outside of crypto. Did you want to sort of let our listeners know a little bit about where you've come from and what you do now in the industry?
Okay, look, thanks for having me. My background's probably a little different than a lot of people in crypto. I actually came through the investment banking ranks. So I was an M&A and financing banker for 20 years at Goldman and JP Morgan. Spent the vast majority of that time focused around the telco media technology sector. So when I left banking in 2016 looking for something different to do, crypto was not what I was looking to do. It was completely off the radar, and taking some time off, kind of found my way to Bitcoin in the crypto space, and the similarities were striking in terms of lack of institutional understanding, entrepreneurs that had very different backgrounds traditionally that were trying to create highly disruptive different stuff. Had that marriage of all the things I like, which are technology and financial markets kind of built into one. So started being sort of something I was looking at while I was trying to think about what next to do in my career, and just kind of took over my life. So it became clear this is where I needed to go.
Yeah, and I guess like you said it there, like the convergence between TradFi and crypto has only gotten stronger the last few years. I think working at SwiftX, like we see this trend sort of developing and growing stronger, and I don't see that it's slowing down anytime soon. But I guess you being sort of having your finger on the pulse of this stuff, like what's the end game between crypto and converging with TradFi? Like I know there's probably no end game, but like where do you see that sort of sitting in the next 5-10 years?
Yeah, I think the interesting thing that's kind of brought that sort of TradFi convergence, and we're seeing it from capital markets through to application development and technology rails, I think it's two things. Just the sheer scale of the crypto market, like 600-700 million people now own and use crypto in some way. So the addressable market now is too big for traditional financial players to ignore. I think the second factor is top line growth is really hard in traditional financial services. So if you can find something like crypto, which has bottom line cost out capability, it's highly attractive. And so, I look at crypto as kind of going through its sandbox phase over the last kind of 7 or 8 years of proving up that it's stable enough, it's rigid enough, it's got enough utility in it that it can actually address a whole bunch of financial services. And then you've seen some of the players that have adopted it early, like Robinhood, that have seen massive growth in their margins when they've adopted crypto products. I think Vlad's on record saying he makes 3 to 4x more on a crypto trade than he does on an equities trade. And so, of course, people like Robinhood then try to tokenize everything, because if you can make 3 or 4x on trading a tokenized Tesla stock versus trading a real Tesla share, you're going to push it that way. And I think traditional finance is starting to recognize that, and so they're starting to move parts of their businesses to those rails for that sort of cost out opportunity or efficiency. So where does that lead in 5 or 10 years' time? I think it leads to traditional finance using crypto extensively through their businesses to get cost out. But I don't think that's the end game. And I think, to be honest, as a passionate crypto advocate, that would be kind of depressing if all crypto was the cost out opportunity for traditional finance. I think we start to see the new models and stuff as well start to emerge. And we're starting to see that with decentralized finance. I think market share of decentralized finance futures trading in crypto is now gone from kind of 0.5% to 20% in a pretty short space of time. We're starting to see tokenized stocks come back to decentralized finance. We're starting to see decentralized finance lending started to get integrated into traditional finance layers, where people can just click and shoot stable coins into a lending platform and get the yield and those sorts of things. So I think we'll see much more disruptive activity than just traditional finance staying the same using crypto rails. I think we'll see whole new business models, things like pump.fund, all those sorts of things that are throwing stuff at the wall to kind of see how you can use these new rails and how you can introduce new financial services, new social interaction to the whole kind of financial services universe that we've seen. It's probably been largely undisrupted for the last 20 or 30 years.
And in the short term, we have seen sentiment take an absolute rocking. How are you guys at the fund, at the asset management level, sort of looking at the market right now as we head into the back end of the year? We had Jamie on just a little bit ago from Real Vision, sort of giving his take on 2026, hopefully giving us a sigh of relief maybe. Is that kind of how you're viewing things?
We try to put rules around our mandates to try and keep us focused on the end game, which is giving our clients exposure to the long-term growth of crypto. So the mandates we manage that allow us flexibility to move in and out of the market have pretty strict sort of caps and collars on where we can go, and we generally run less than 20% cash in our portfolios. So we position our portfolios as giving that long-term upside exposure to crypto. And so we sort of ring fence it. We can only go to 20% cash, so we're generally sort of 80% plus long at all points in the market. So we try to stay focused on trying to pick the next winners, as opposed to, the market can be up and down next week. Now, we're not immune to that, because that's just, that's part and parcel of what we signed up for.
Yep.
But we remain long-term bulls. That's our mandate, and investors have given us capital to get that long-term exposure to the outsized returns that we think crypto offers over a sort of 5+ year term, and that's what our funds have generally offered, albeit short-term volatility is still pretty violent. We try to stay pretty focused, and I think if we looked at the mistakes that investors generally make in crypto, from the most sophisticated institutional investors down to the smallest retail investors, it's getting over exuberant at the top and getting overly bearish at the bottom. So we try to make sure that we kind of try to keep our eyes fixed on that sort of long-term path and set our portfolios for that. Having said that, our portfolios are probably more defensive than they've been for the last few years, over the last 3 or 4 months, because there is some headwinds on the macro environment, and clearly crypto's going through a little bit of a transitional period now in terms of ownership, and the macro environment being a little bit shaky as well.
Yeah. So I want to take things in a bit of a different direction. So I was going through your Twitter, which, by the way, you've got some fantastic value on there, some fire tweets, so make sure to check that out. But look, you had one recently, and you talked about the AI bubble. It might have been a retweet. And I guess Pav and I have talked about it because it is all relevant, right? This impacts the crypto markets. I think the tweet was showing that, compared to where we were in previous sort of bubbles, we're still very early. And so we might not have a blow off top yet. We still haven't really had a parabolic run up like we've seen in previous bubbles. So just want to get your thoughts on sort of that sort of discussion around there being an AI bubble, and if it's as serious as what a lot of people are saying it is.
Yeah, look, I'm a bit of a bubble skeptic, if we put it that way, right? Because people seem to, there's a lot of successful pundits out there that have called, 854 of the last 3 bubbles, right? Probably popularised a little bit by the Big Short. Seems to be somewhat of an engagement type mechanism to call everything a bubble. And I mean, having lived through what's called the biggest bubble, which is the .com bubble, it ended up being 100% right. Like, the internet did completely change the world. Whilst there was a short-term price kick around the 2000s, which was clearly pretty violent, and the markets had got ahead of themselves, investors were 100% right in the mid-90s that the internet would change the world.
Yep.
It would create the greatest companies and the most valuable companies we've ever seen. And if you'd held the course through that period, you would have outperformed dramatically. I think one of the most incredible portfolio kind of constructions I put together as a backtesting experiment, there's a famous .com ICO that blew up called pets.com. It went to kind of massive valuation, went to zero in the space of 3 or 4 months, kind of used as that sort of red flag around the top of the bubble. Now, if you put 90% of your entire equities portfolio into pets.com at its peak and 10% into amazon.com, you still outperform the S&P 500, right? So, whilst the stock selection clearly plays into that, it shows you that even at the top of the excess, if you timed it completely wrong, as long as you picked a couple of leaders at the complete wrong time, you still massively outperformed the market. And so this bubble of what the .com was actually a short-term price bubble for stocks, but a long-term massive opportunity for investors. And I think if we looked at AI today, I don't think there's many people that think AI isn't going to transform society just like the internet did. So there will be some pretty dramatic ups and downs in, individual sector stock performance through that period. But backing and being strategic in how you back that disruptive technology is generally where the bulk of outperformance comes from as an investor.
You put out another tweet recently basically saying that DApps across the crypto ecosystem make about 60% of the revenue, but they only make up about 7% of the market value. I thought that was really interesting, and I'd never really sort of considered that. Do you think the DApps, which for anyone that doesn't know, decentralized applications that live on top of things top of networks like Solana and Ethereum, and offer some sort of service or engagement? Do you think it's a bit of a sleeping giant? Because oftentimes people will look at the network itself as an investment opportunity, but then how do you sort of play it from a DApps perspective?
It's a key investment thematic over the next 3 years that we think that you can't have a whole subsector of a space now go from 2 years ago close to 0% of the revenue of the space now to 63%, but trade at the same relative value it did 3 years ago, right? That point you make, it's 63 close to 70% of the entire revenue of cryptos in these applications, but they're 7% of the value, and it makes no sense to us that that's going to last. So things like the Clarity Act help there. I think things like these applications getting longer and longer track records help with that re-rating. So that would be our key position in our portfolios is we're well overweight 7% of our portfolios in those applications because we think that's where the bulk of the growth is, and we think that's where both the bulk of the value is. Now, the one thing I would say is this: we've seen this movie before. You saw it in the internet. Like if you went back to 1998, 1999, the killer stocks that performed through that .com boom in sort of the mid to later parts of that were the infrastructure layers, the Cisco's, the Nortel networks, the Juniper networks, the companies that were building that underlying layer that allowed applications to prosper on top of them. And I think crypto's done exactly the same thing. We've focused capital, and investors have focused on investing in those rails because that's where the early gains are. And it's much harder to pick an application out of the 1,000 applications than to pick the one or two chains like a Solana or Ethereum that are going to win. And investors rightly kind of take that view that I don't know which app's going to win, but I'll own some Solana and I'll own some Ethereum because whatever application wins, I get kind of a share of the profits.
Yeah.
I think we're now getting mature enough in the space that we think we can actually tell which applications are going to win.
Yeah, so I wanted to ask, how do you actually find the DApps that are worth investing in?
Yeah, well, we look at traditional metrics like user flows, business models, timing, market, and revenue, and bringing that sort of traditional equities-like lens to an application that's now got $300 or $400 million a year in revenue, right?
Yeah.
These are pretty incredible statistics. I think, one of the other stats that kind of gets passed over is if you look at the, 3 of the 5 fastest growth and highest profit startups in the world come from crypto.
Yep.
So the ability for crypto apps to bolt onto that infrastructure layer that the space has so successfully built over the last 10 years and immediately scale to global businesses is like nothing we've seen before. It's not like an internet app where you have to build the whole back end, you have to launch the app, you might launch it in one state in America, then you might launch in Canada, and then you might launch in Europe.
Very
in crypto, 90% of the back end's already built.
Yeah.
You turn on the site, you're launched 100% globally on day one. And so we see companies like, Pump.Fun, we see businesses like Axiom, we see businesses like Polymarket literally go from zero to hero in a space of time that we haven't seen in any other tech startups ever in the world.
It's just nice having another rational voice come to the show and just bring us all, off the edge. I think lately everyone just gets so caught up in the noise and the now and kind of lose sight of just the fundamentals. It's so easy to miss the forest for the trees. So yeah, thanks very much for coming on and sharing your thoughts today. It's been great.
No, thanks for having me. It's always hard to be rational in an irrational market, but that's the challenge, right? That's how when you make outsized returns, you've got to pay for it in some way, and that's trying to stay rational through the noise. And I think that's what crypto does really well. So
well said.
It's good to talk to you both today.
Thanks. Thank you.
Cheers.
Alrighty guys, welcome back. We've got another chat today with a very familiar face and friend of the show. We got Roy, aka Zeneca. Zen, welcome back.
Thank you, good to be here.
So for anyone that doesn't know, Zen's a bit of a NFT expert, but he's also just overall crypto enthusiast and has a huge community over at ZenAcademy. Is also a SwiftX ambassador. So we love having chats with you, Zen. It feels like you're part of the family now. So how's your weekend been so far?
Yeah, pretty good. Just got in yesterday. What's today? Today's Saturday. I mean, it's just great. The energy, even though the market has gone down, the energy is still pretty high.
That's
people
kind of what I was saying.
time.
It's at least refreshing that people are showing up, they're having conversations, they're getting engaged.
It's not like a ghost town or anything. It's the opposite of that. It's packed. There's people everywhere, and vibes are high. And
so what sort of conversations have you been having so far? Are they interesting topics, or are they some of the same old stuff that you're always hearing?
A bit of both. When the market is tanking a little bit, you kind of get the generic, what do you think is going to happen? Where's the market heading? A lot of people here are interested in XRP. It's just like the
classic
token of it's Bitcoin and XRP, probably the two most popular comments or tokens people want to know about. But then there's been a few people asking about to me, a little more interesting stuff like the privacy coins, what's happening there. There's been a few that have popped off, and people kind of want to know. And
that was interesting because it's like a lot of these Dino coins that have been in the privacy sector, have you making sense of like why they're getting a bid right now?
Yeah, so like Monero and Zcash are probably two of the bigger ones, and they've both been around since I think 2016-ish, maybe even 2014 for one of them. And they've had little pumps in the past, but it's really in the last 2-3 months that they just went kind of parabolic.
Yep.
And I guess sometimes there's no real rhyme or reason in crypto. It's just like people start getting a hold of a narrative and then it starts going crazy. But I think it's a little more than that. There's like this, I guess, narrative in the world where people are getting a little more concerned about how their data is being used and how much access they're given to big companies, especially with AI and stuff now.
True.
China is surveilling their citizens, and it's just getting crazier and crazier and crazier. And now we're seeing other countries kind of move in that territory, especially when it comes to money. Like, what can you do with your money? Like the EU's passed all these laws where it's like it's illegal to have over $1,000 of cash on you and things like that, where you really have to explain every transaction that you're making in the fiat world. And so people are thinking more about privacy, anonymity, and that kind of stuff. And Bitcoin's great, Ethereum's great, and all that. But one of the things that is a feature and a bug with them is that every transaction is public on a public blockchain. People kind of have the perception that it's all private, but it really isn't. And that's a good thing and a bad thing. It's good for transparency, but it's bad for actual privacy. If you don't, imagine if your bank account, if people could just go in and look at every transaction you made on a daily basis. So I think that whole narrative is kind of pushing the privacy coins a bit lately.
We've covered the privacy coins at length in recent months, just because they've been flying, right?
Yeah.
We've also discussed they're just not accessible. Like, I'm pretty sure there's regulation, definitely in Australia, but I'm pretty sure as well overseas about public exchanges can't be listing these coins because the government doesn't want you to be transacting anonymously, right? So I don't know, where does that sort of lead in your mind? Like, surely that has a ceiling in terms of accessibility and overall mainstream adoption.
Yeah, it is tricky with regulation, of course. I know that Monero is a coin that is basically not allowed on any exchanges for that exact reason. Zcash is an interesting one because it has this optionality where you can basically shield your tokens and transactions or have it be public. And so what some exchanges are doing is allowing access to transactions or withdrawals with the public side of the chain, and then if the user then wants to go and shield they can do that, but then it's all off chain and it's not related. But again, I don't know exactly how that works. With every country is going to have different regulations, and different exchanges are going to obviously have to comply with those. But I would say it's probably the largest risk to these privacy coins is that it is so difficult to interact with them because of government regulation. But I'd say the flip side to that is it kind of also highlights how important they are. If the government can come in and shut down access to these tokens, it's kind of like the same as them freezing someone's bank account. You kind of want access to them for that exact same reason, to protect your funds.
And some of the other conversations, obviously, around what's the market doing right now, is there anything you're sort of looking at too as towards narratives and you've been writing about as well?
Yeah. I mean, obviously the overall market right now is a bit bleak. Bitcoin's basically been down only for the last 6 weeks. It's 126K, now we're at about 80 to 85K. I don't know if we're at the bottom or if we've got a little more bleeding to go or not, but within crypto itself, I think there's always exciting stuff happening. Privacy stuff is exciting. I think AI stuff is really taking its next leg up, or about to take its next leg up. Obviously AI in the world is the biggest thing ever. And within crypto, there's this new protocol called X402, which basically allows stablecoin payments to be made via APIs, so regular internet APIs, not even without crypto involved. So that to me is that unlocks infinite new use cases for just people and AI agents and bots and all sorts of stuff on the internet. And there's interesting stuff happening, I think, all the time. But I'd say AI is probably the area that I'm looking at the most.
I think that's been the common theme. Everyone's just saying, why market down? Is there anything that you're sort of looking to sort of resolve in your mind on what's in the market that's different now that could be sort of resulting in more selling pressure right now? Or?
Yeah, it's a good question. There's probably 3 or 4, I think, main narratives or reasons that market is down now. One is a lot of OG Bitcoiners are selling, and that's people that have held for 10 plus years. I don't know that we have a exact reason why. Is it are there fears of things like quantum computing and stuff? I don't think so, because those fears have been there forever and they've been around forever and they know that kind of stuff. The most logical reason I've heard is that they never really had the liquidity to sell into until the ETFs came along. And now there are these ETFs with billions and billions and billions of dollars in liquidity. And now if someone had $1 billion in Bitcoin, and they wanted to sell, they can do that in
Right.
a reasonable way now.
Okay.
So that's one reason. Another is just like the geopolitical landscape. America is kind of America is America.
Yeah.
Trump's approval ratings are a little low, and people are sketchy about next year. People are a bit worried about like an AI bubble or an everything bubble, and the traditional stock market's doing well, but it's also largely propped up by like 7 companies.
Pretty
if you take
much.
them out of it, it's a little
It does look gross, doesn't it?
yeah, a little bit gross.
Yeah.
So I think those fears and worries are maybe
Yeah.
part of it. It's hard to say exactly what though.
Well, yeah, I mean, we spoke to ASX Trader last night, like we're at the Ledger event where you spoke as well. The CEO of Strategy was there. Obviously, he's not too fond of this, the Bitcoin going down. I think their levels are at like 74.
74, yeah.
For a cost basis, 74K. So, and ASX Trader literally stood next to him and said, I see it bouncing at 70. So I'm like, oof.
Yeah.
Let's see how this plays out. But
Yeah.
I think it's it's pretty dire at the moment. But we've spoken about it at length. Like, do we actually think this is the start of a bear market? I'm not so sure. Like,
Yeah.
and I think we spoke last night. Like, it's 50-50, right?
Oh, yeah.
That's how I feel like at the moment. Yeah.
Earlier in the year it was like 20% of bear market chance, but then now you're like more 50-50. But a lot of people are just 100% certain it's like the start of the next bear market. We've hit our cycle. Onto the next. So
I mean, if you believe in that like 4-year cycle theory, then it's been 4 years. The bear market is starting now, which I don't buy into that anymore. I think it's based on a sample size of like 2, and things have changed so much in the last 8 to 12 years. There's a chance, of course, that we're entering into a bear market, but I am cautiously optimistic, I would say.
Yeah, nice.
Well, Zen, thank you so much for coming on again.
Thanks for having me.
I think we'll have you on again soon, so we look forward to that. But as always, we'll see you around the convention. Have a great time, and we'll see you again soon.
Cheers. Thank you.
Awesome.
All right, guys. We're here with the next special guest. It's actually 2 special guests. We've got Chris joining us on the potty. Ted's taken a bit of a...
Very special.
He's put in his super sub. And Sam Greeny, mate, welcome back to the show. It's good to get you on.
It's great to be back.
How you finding the conference so far?
Mate, the conference is good. I'm surprised at how many people are here considering the market conditions.
Yeah.
But it's good to see. I think
It's a good
that's
energy.
bullish for crypto in general.
What do you think, Chris? Do you agree with that?
I think it's been pretty good so far. We've had some interesting characters. I think the difference of people coming into the conference last year, it was like a 70-30 split of people who were already invested, who were like part of the category or like, had already participated. This time, I think it's swapped. I think 70% of people at the conference this time haven't ever like invested into crypto.
Do you reckon they're doing
in any
their
capacity.
research?
I think so. I think the market's giving people an opportunity to say, hey, I've never invested in this asset class before.
Gonna go check
Maybe
it
I'm
out.
at a bit of a discount. I'm not saying it's a Black Friday sale, but maybe this is the opportunity.
Well, let's dive into that right away, because obviously there's been some blood, lots of panicking, lots of emotions running high. What are you seeing, and in your community, what are you guys talking about, or what's happening right now?
Yeah, well, I think I've been pretty much stabled up / bearish for a while. There was just like, you could see there was exhaustion on, like, I'm a very technical based trader, so charts are everything to me, and price action really does reflect probably what the sentiment is and what price is doing. So for me, I've been quite bearish for a while, and it's no surprise to really see Bitcoin come down. I think maybe the 10th of the 10th liquidity, there might be something happening behind the scenes that we might find out in the future, who knows, but Bitcoin's been weird to trade more recently, and altcoins seem to be holding up okay. So if Bitcoin can find a range, I think maybe we could see a little bit more of an altcoin season if BTC dominance continues to probably keep coming down.
Yeah, okay. During these sort of times when we are obviously quite emotional, like, what are you sort of telling your group? Are they asking certain types of questions? Like, what are you seeing on the front lines?
Yeah, 100%, man. Like, emotional trading is probably the hardest, like, and trading psychology, it's like the hardest thing that we all deal with, whether it's a trader or an investor, whatever works for you. But it's all about the psychology. And so for me, like, I'm just 9 years in, so I have that benefit of being in a bull cycle and a bear cycle twice before myself. So I try to really articulate like why. It's not like, oh, I'm just selling my bags because I want to. It's actually, no, I'm a little bit bearish here because of A, B, C, D, on-chain volumes going down, US dollar strength, dominance is going up, stocks seem a little bit overextended. Like there's a range of sort of macro and technicals that I look at. We're at all-time like low for fear as well on the crypto index.
Yeah,
so
how crazy is that?
It is wild.
It's like FTX territory.
We're sitting at 10. I think it's 10 or something.
Well, if you look on the last 2 cycles, we actually do hit extreme fear at the start of a bear market after a top is in. So we could be rhyming there potentially. And I still think there's bullish catalysts for 2026. It's just, could we pump up and it be a lower high? And that is technically the start of the bear market.
Well, I guess, what do you think is going to be the next catalyst for us to exit a bear market if we're entering? I guess there's been a lot of chatter here talking about institutional kind of investment being the next wave of investment into the asset class, and that being the thing that pushes us to the next $5-10 trillion in the asset class? Or do you feel like it's confidence in retail and that will be the driver, I guess? Do you feel like it's sitting in one path or the other?
Yeah, it's been really interesting. This has obviously been very institutional back this cycle, and I think a lot of retail have been burnt. Last year we were euphoric, right? Meme coins are at all-time highs, $127 billion invested in meme coins. My portfolio was at all-time highs literally a year ago. So I feel like it's an opportunity for retail to come back, I think. And as you said earlier, right, a lot of people aren't actually exposed to the market currently. So I think it's going to be backed by institutions. Obviously, you've got a lot of these bills in America that are starting to be very pro-crypto. It's just, are they translated around the world as well? Which then I do think, if you look at ETF inflow and outflow, they're just as bad as a retail trader, right? They're buying the all-time high and they're selling right now. Like, it's crazy. Yeah. So, yeah, it's an interesting time in the market, but I think with a bit of a drop down in price, it gives everyone a bit of an opportunity to maybe feel, okay, well, Bitcoin's only at $85,000 right now. Well, a month ago it was at $125,000. That's $40,000 that it's gone. Yeah. We've lost like $1.2 trillion in market cap. Yeah. So like that, it is a good opportunity, but it might not necessarily be an opportunity in the next year or so, but it might be for the next 5 or 10 years in time.
Yeah. I guess, what are you guys finding through the community that you have? Are you finding that people are using this opportunity to continue to enter in and, dollar cost in these positions? Or are that people just holding back and really waiting to see where that new floor is, I suppose?
Probably a combination of both, right? Like if you're more experienced, then you've definitely probably realized that at some point BTC does need to come down and it probably presents an opportunity. And if you have a long time horizon, then it's probably going to give you one, right? But I think times like this are the best. I think I always say on my live streams and all my content is like a lot of people come during euphoria and then they leave during fear and they wonder why they don't make money. Yeah. You literally should do the opposite. Like as soon as there's fear in the market, that's the time to be checking out opportunities, to growing connections, to growing a brand. And then when it's euphoric and everyone's talking about it, that's a good time to take profits or to walk away for a bit until you start to see the market cool down a little bit. We've seen a massive shift this cycle. Like altcoins have gone nowhere, right? Arguably, the meme coin super cycle was our altcoin season of 2021. And I think people are seeing through the BS and they're looking at actual utility-backed projects that are generating revenue or have good CEOs, founders, whatever it is. The buyback is a big thing as well at the moment. Yeah. So I think people are maturing, and I think crypto is no longer as speculative as it was. And as I said, like I've been doing this 9 years and it was extremely speculative the last 2 cycles. And I think a lot of retail investors, a lot of institutions are like, what are actually the genuine projects? What are the ETF potentials that are good tech, but then maybe do have upside in the years to come?
Yeah, and are there any like sort of sectors or areas of the market where you are seeing there is again like that actual positive market structure? I think meme coins is a good example of where we see wealth go in and wealth just go straight back out. But is there anywhere where you're seeing it kind of accumulate right now?
It's been so interesting. Like it's been so rotational this cycle. If you haven't rotated through all the different like memes, NFTs, DeFi, specific altcoins, airdrops, whatever it is, then you probably haven't done well this cycle. And luckily I have, my community has, and that's been a great part of it. But I think there's like the perps seem to be a big thing right now. Perp airdrops, if you look on-chain volume for meme coins is at all-time lows. Launches are at all-time lows. But perp volume is at all-time highs because there's like 30 platforms that are driving incentives.
There's like a new one every week.
You just watch though. As soon as these airdrops come out, whether it's Lighter, Asta, Avandis is one that's just absolutely dumped, right? You've got Hyperliquid, maybe season 2, all these sort of things. As soon as their incentives dry up, just watch their volume absolutely capitulate because people want to maybe hold stables or maybe start getting back into majors. So NFTs have absolutely dumped a lot because again, why do you need to hold a pudgy penguin that's worth $20,000, right? And don't worry, I've round tripped that. I know it's an interesting trend right now. I think people are really seeing through the rubbish of like marketing and hype and speculative, and they're actually like, well, something like Hyperliquid, for example, actually has, or Pump Fund, which actually has a business and they have revenue coming in. It's like, that's probably the thing that I'm looking for is strength, like in that capacity and structure and price, but then strength against Bitcoin, because that's where you want to be. Like if you want to make money, you want to outpace Bitcoin. Otherwise, you probably shouldn't be looking to actively trade.
have you found like the conference so far? Have you had any chats with anyone? Like anyone changed your mind on anything, or have you kind of been hearing something that's been annoying you? Or
No, I think really good feedback.
Yeah.
People say, Greeny, focus on your education, stop being an engagement farmer on Twitter. That's some feedback I got today, and I was like, hey, Twitter's a game.
Yeah, we like the Twitter.
Twitter is a game, and you got to understand that. Otherwise, you're not going to make it if that's your goal, obviously. But no, the conference has been fun. It's good to see a lot of people here. I think a lot of people are curious, and I think that's good because, I mean, if prices were at all-time high, I'm sure the curiosity would be peaking as well. But at least there's opportunities now because we have had a little bit of a bear trend over the past couple of weeks. So, no, the conference is good. It's good to see Australian crypto grow, and I think there's so much upside in this country. We obviously have a lot of wealth in this country. And so a lot of people who need to become exposed to this market or want to be exposed to this market. So yeah, it's cool to be back at ACC this year for sure.
Well, I'm sure we're going to hear more from you in the near future, but mate, thank you very much. Where can people catch you if they want to follow you?
Yeah, easy boys. At Greeny Trades on Twitter, Instagram, YouTube. Create a lot of content, and then I run a trading group with about 500 members across the world. We're going to build out an education platform in the months to come to really focus more on research and help people with like beginner trading courses and those sorts of things. So if you're keen to check that out, it's just gtg.education. But yeah, send me a message on Instagram or Twitter and I can help you out as well.
Sounds
Brilliant.
good.
Thank you so much.
You're welcome,
Thanks,
boys.
Greeny.
Awesome.
And thanks, Chris.
Thanks for having me.
All right. Thanks.